All of this at a time when the dollar was picking up considerable steam. That could explain the sell-off in a lot of those technology issues, which we adversely hurt by that, and more correctly to the sinking Chinese yuan. That currency makes a lot of companies that do business there, Apple chief among them, AT&T, if you want to extend it to that, very vulnerable to that sort of thing, and could impact earnings when they come out for the second quarter. Let's get the read on all that with market watcher Dennis Gartman. Dennis, you don't like to overread, and I know the good thing about you is you don't necessarily stress or hyperventilate on one day's worth of trading or the last couple of hours. But it is interesting to see how this trade thing does play out. It's a constant irritant and a thorn. It seems to be on everyone's mind, you know?
And well, it should be, Neil. I mean, the fact that we have put trade and our trade deficit apparently on the front burner, and our president, I think, wrongly being so terribly concerned about it, has caused buyers to go to the sidelines, has caused sellers to come to the fore, and I don't think anybody should be surprised by this. I'm very concerned about what we are doing as far as trade here in the United States is concerned. It is a very, we've heard the comment before, this is a very slippery slope, and the fact is we tend to seem not to want to get off that slippery slope. We tend to want to get on it even more aggressively, and I think that has caused investors to reconsider the future, and properly so.
You know, it's ironic that in the middle of all this, we're getting these BAFO auto sales numbers, GM and Ford and Fiat Chrysler, yet to a company, they're all expressing the same concern that not only will this potentially dramatically lift the average price of a new car, I think from $32,000 to as high as $37,000, $38,000, but that it's going to chase buyers away, period. Now, that has yet to be realized, but they're already telegraphing it. What do you make of that?
Well, let's understand, markets are driven by fundamentals, and they are also driven by the psychology, and the psychology is changing. If you're a consumer who was thinking about buying an automobile, just thinking about doing so in the next several months, and suddenly the cost of that automobile has gone up 8, 9, 10%, your propensity, and all economics, as I've always said, all economics is the study of people's propensities to do something. Your propensity to step up and buy that automobile has been somewhat diminished, and that's all you need to do at the margin. And price is always made at the margin. When the last 2% of the buyers step aside and the last 2% of the sellers come to the fore, the game changes. I think this was a very serious day today. You walked in this morning and to see the Dow up 150 and then close down 132. If you look at one day, this is a very serious day. The market's tendency on the day before July 4 is always to rally, and here it is declining. This is not a good sign.
So that late day sell-off where it accelerated, now, particularly in the technology issues, what did you make of that specifically?
Well, I trade only for my own account, and I came in this morning short the market and feeling a little disconcerted when I saw what was happening. But as the day progressed, I felt a good deal more comfortable. I think we entered a bear market globally, not just here in the United States, but globally back in January of this past year. And I think that we are now 5 months into a bear market. And people are not paying enough attention to the fact that here we are down for the year instead of being up for the year. Well, and globally, stocks are down almost 9%.
I'm sorry, I just want to be clear. We're more closer to a correction than a bear market. But you're saying we're going to get to a bear market. The others, particularly in Asia, particularly China, have raced us there first.
Well, I hear too many people say that you have to be down 20% to be in a bear market. I think if you go down 7 to 8%, that's enough from the top for me to say that we're in a bear market. If you're down 20% before you admit that things have turned bearish,
you're right. And a third of the S&P 500 issues, a third of the S&P 500 are in bear market territory. You're quite right about that. Dennis, is there a sense here that we're picking the wrong fight, though? I mean, you could pick and choose any individual industry and say a country's taking advantage of us, like dairy with Canada, and say, all right, Canada's screwing us, when in fact the average tariff in Canada works out to about 4.5% versus our 3.5%. China's a different story, I grant you, but you have to average it out, because in our country we also go after light truck vehicles from abroad that we tax at over 20%. So we play this game too. It averages out in our favor where we're low, as does Canada's average out when we're low. So I just think we have a nutty way of penalizing individual countries based on specific goods.
I couldn't agree more. The fact that we've taken on Canada, our greatest ally, has made absolutely no sense to me. I can understand taking a look at what China has done because they do trade unfairly, but taking a look at what Canada has done, taking a look at our trade with Europe and what they have done, taking a look at other countries has made no sense. And when I understand, I like to explain to people, one of the things we need to understand, we buy a lot of goods from China. They give us goods and we give them American paper in return. To me, that looks like a pretty good trade on our side.
Yeah, and the syrup is delicious, but I digress. Dan, it's always good seeing you. I hope you have a very safe and nice 4th.
Good to see you, Neil. Thank you for having me on. Always a pleasure and my honor.
Same here, my friend.